back to markets today. It was a market that began choppily but then evolved into a huge short covering rally. Sensex rising 400 points, helped largely by the bank Nifty, which rose 3.5 percentage points. Midcaps a tad softer, rising just about 0.6%. Nevertheless, it appears that the global markets had also reached oversold regions, and we saw the second half of the Indian rally being bucked largely by the European markets, which were up about 2% apiece, and the Dow futures, which was ruling about 200-300 points higher for a better part of our trading afternoon. Well, now let's get to some more positive micro news. We told you first this, and now it's official actually, in what comes as a huge relief to IT major Infosys. The US Department of Labor has cleared the company of all violations in the US H-1B visa misuse case. Kritika Saxena is here with all the details. Kritika.
Well, a quick background first. There was a company called Southern California Edison, which is a power distribution company, which had distributed an IT contract to both TCS as well as Infosys. Now, there were reported cases of alleged H-1B visa misuse against both the companies, as a result of which the US Department of Justice and the Department of Labor had conducted a thorough investigation over the last one quarter over a possible violation of US H-1B visa norms. Now, today, it has been confirmed, and Infosys has confirmed to CNBC TV 18 that they have been cleared of any possible violations of H-1B visa norms, and that around 145 cases had been studied, or 145 files of Infosys had been studied by the Department of Labor, and they have officially cleared them in this particular case specifically. The other IT player, that is TCS, has not. We don't have clarity on if they have been cleared or not, but TCS has given a statement to CNBC TV 18 saying that orders by the Department of Labor have taken place from time to time. They have been found to be compliant, and TCS attaches the highest importance to a strict compliance program. They abide by all regulatory requirement and visa laws. So no confirmation on if TCS has been cleared or not, but I do understand that the probe against TCS as well is in its final stages and will be completed soon. So let's hope that the way Infosys got relief, we should hopefully see some kind of relief coming in from TCS as well.
All right. Thanks, Kritika, so much for that. That's relief for one big Indian IT major, the other still waiting for the outcome. Let's get back to some market opinion. India looks most attractive among global markets. That's the word coming in from Rajat Rajgaria, CEO Institutional Equities of Motilal Oswal Securities. He spoke to us from the 11th Motilal Oswal Investor Conference, and he also believes that India will soon see double-digit corporate growth.
The last 1 month of correction has been quite excess, right? And it has corrected many of the previous excesses which were being made on the basis of hope, right? The general mood amongst the corporates is very clear that today they are more positive on the growth over the next 6 to 12 months than what last 6 to 12 months have been. I think India has been just painted with the same brush amongst all other global markets as far as the selling is concerned, but as and when rationality starts prevailing in, people will believe that, hey, this is one market which probably looks the most attractive amongst the options that we have.
All right, now let's get to the big global voice, Mark Matthews of Julius Baer. He spoke to us and he says that a hike in rates by the US Fed in September could actually be a good thing for risk assets, for equities across the world.
The major catalyst will be the Federal Reserve when it meets next Thursday. If they announce they're raising rates, I think we get a big relief rally across the board, including in emerging markets. The sustainability of that relief rally will depend on other factors like China, like the elections in Bihar, like what happens to Apple. So there are a lot of other factors in the world floating around. But I think if we can get the first Fed rate hike out of the way, and I think there's a good chance that's going to happen by Thursday next week, that'll provide a solid foundation for the markets to rebuild.
All right, some more corporate action now. It's not all about cigarettes for ITC. The company is all set to ramp up its FMCG bet as it eyes 1 lakh crore of revenues. That's 1 lakh crore rupees of revenue by 2030. It's also say that ITC is likely to set up 3 additional factories by the end of this fiscal. Priya Sheth is joining in with those exclusive details. So what is this roadmap like, and what will it mean for the company, Priya?
Well, absolutely. ITC has pushed the pedal on manufacturing. In fact, in its journey to achieve revenues of about 1 lakh crore from its FMCG business by 2030, we learned that the company is in the process of setting up FMCG factories in 3 states. Now, the first factory to come up is in West Bengal, Punjab, as well as in Karnataka. These will come up by the end of FY16 is what we're learning. What essentially ITC is looking at is increasing the number of in-house manufacturing and reducing the kind of outsourcing activities. Right now, the company is manufacturing 30% in-house while 70% is outsourced. But what we're learning is that over the next 5 years, in-housing will make up about 70% of the overall pie. In fact, what we're also learning is that the company will commence a production of food manufacturing before it does other personal care brands as well. In fact, we did write to ITC on this, and the company said that they are looking at setting up various integrated consumer goods factories all across the country. And the first few states which are likely to see factories setting up would be in Punjab, West Bengal, Karnataka, Maharashtra, as well as Telangana. Back to you.
Right, it's not just ITC. Priya, thanks a lot. And it's not just ITC, but another multinational who's also making a similar commitment. In fact, this is what he told us. We are committed to investing €1 billion in India by 2020, if not earlier. And that word came from Siemens. Shireen Bhan caught up with the president and global CEO of Siemens, Joe Kaeser, and he says that he sees exciting opportunities in India.
It could be all the way up to 2020, which has had our global managing board here meeting in India. We listened to our people, what they had to say, and the discussion and the presentation was full of opportunities. So I'm very, very excited about it, and I really like to spend the money because the opportunities are there.
What kind of growth are you anticipating in India? And of course, in the third quarter, we've actually seen your numbers look better on account of the margin expansion, and that is part of your strategy, which is not to go after low-margin businesses, but high-margin businesses, I imagine. But what is the kind of earnings growth that you expect in the Indian market?
If we look at the top-line growth, this is definitely about infrastructure and healthcare. This is where the biggest opportunities are there. And we still do believe that in terms of energy management, decentralized energy management, we can do a lot to help the country to be a reliable provider also of electricity and affordable power.
Well, that's the word from Siemens. Now, moving on. Economy is slowing and stock markets are sputtering. Add to that, crisis in China. Amidst this backdrop, the Prime Minister today met the who's who of India to take stock of the situation. From Mukesh Ambani to Cyrus Mistry to KM Birla to Sunil Bharti Mittal, all the bigwigs were in attendance. This is the second meeting in the last 2 months, and this comes amidst the turmoil in equities and currency markets around the world. India Inc. complained about the high cost of capital and also raised concerns over pending reforms, especially the goods and services tax. The Prime Minister urged India Inc. to take risks and make investments to lift the economy.
They said that as the experience picks up, there are some sectors in which the government has to tie up certain loose ends. 2 or 3 examples were also given. So each one related to his own industry and his own sector while suggesting this. Prime Minister, while responding to the entire debate, said that since you regard this as a great opportunity for India, it is for India's private sector also now to increase their own investments. And conventionally, compared to others, the private sector has a greater risk-taking ability.
Even today's newspaper, for example, has an article on Siemens wanting to come to India, and that's consistent with, companies like Foxconn, Xiaomi, many others either committing or actually committed to coming to India. So in a sense, some of these investments are also a little bit of a hedge against the China slowdown. So while India, for all these reasons, will remain an attractive investment destination in and of itself, these current developments might also contribute a little bit more.
We have been protected because of our strong fundamentals from the China situation. However, obviously China will be vacating a lot of spaces. We could look into that. But as a prosperity or as an opportunity for the country only. And the second one was the ease of doing business. Little more needs to be done. A lot has been done, little more needs to be done. And the third one, but there are a lot of specifics about people's specific industry and issues. But there was a lot of talk on agriculture.
Right, so India Inc. hopeful that some more policy steps will be taken by the government. With that, we wind up this edition of Markets Today.
Thank you so much for watching and have a great evening.